Hello and welcome again to Money Talks with me, George Pitcher, and Edmund Shing of BCS Asset Management and the Idle Investor website. Edmund, welcome. This week you've been writing for us about gold. Now, investing in gold seems to me to be an extraordinarily old-fashioned concept. I mean, gold. It reminds me of the gold standard. It's not still something seriously that investors should be in, is it?
Of course it is, George. It's just because you can buy bonds, stocks and shares, do not forget about other asset classes like gold. Why? Because gold has been proven over a long time to be a good store of value. And that is particularly important at the moment, George, because currencies are going up, down, sideways, left and right. We don't know where they're going. And sometimes gold is something you can be sure of.
So gold's just another currency, is it? Gold doubloons.
Yes, no, but that's right. You know, we can talk about gold doubloons, Krugerrands, sovereigns, but that is true. You should think, and I think an investor should think about gold as an investment option like another currency. For instance, if you were to look at gold as a currency, last year it would have been the second best currency in the world in terms of performance after the US dollar. And in fact, if you'd held gold over the last 12 months and you'd bought it in pounds, you would have made 12% on your money. Oh. If you'd been a euro-based investor and bought gold 12 months ago, you would be sitting on a 24% gain today.
Well, that sounds extraordinarily good, Ed, but I mean, I'm struggling to understand what the market for it is, because I mean, I understand that we, yes, have it round our fingers and so on, but jewellery and that's it, really, isn't it?
No, not at all. So let's go through the three main areas that drive gold demand. Firstly, you're right, there is jewellery. Now, do not underestimate jewellery, because in countries such as India and China, gold is incredibly important. And they don't buy the cheap 9-carat rubbish either. They go for the real 22-carat, the 24-carat, the good stuff. And they do buy lots of it. Secondly, technology. Think about it, even on a hi-fi or in a computer, there are lots of gold-plated connectors. They require gold. So that's the second part of the area of demand. That is growing. And of course, we come to the investment part, thirdly, which is you want to protect the value of your savings. Gold is one way to do it.
And is that what the big banks have been doing? Is that what's been driving the performance of gold by the big investors piling into it?
Not so much the big investors, but the central banks, i.e. the Federal Reserve or the Central Bank of Russia, have been very big buyers of gold in the last few months. And in fact, if you look over the last 4 years, central banks around the world have been net buyers of gold. They've been buying a lot more gold than they've been selling. So they've been adding to their gold reserves.
And in uncertain economic times, is it always good to have a little exposure to gold?
Well, I would say so, George. In a diversified portfolio where you've got some stocks and shares, you've got some maybe bonds, I think there's always a space for 5 or even up to 10% of your portfolio held in gold.
And what's the best way to get that exposure to gold?
2 ways. You can actually go to the Royal Mint, who've just opened a new website. You can actually go in directly online, buy gold sovereigns, 125, and I think a gold sovereign today is £227 each, and that gets you just under 1/4 of a troy ounce of gold. That's one way to do it. And you can look at your shiny little coin, a little bit expensive, but it's a nice way. The second way is to buy an ETF, an exchange traded fund, which buys the gold bullion for you and even stores it in a vault somewhere in London for you. And that exists. ETF securities have such a gold bullion ETF called PHGP, denominated in pounds. So you can take your pounds and buy your gold bullion that way.
Well, there you are. Thank you very much, Ed. So it appears that all that glisters is gold after all. So get off to the Royal Mint and get some of those gold doubloons to protect your portfolio. Thanks very much for watching Money Talks, and thank you, Edmund Shing. Look forward to welcoming you again.